The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host.
The following takes place between 2 p.m. and 3 p.m.
And we've got the S&P up 21, let's call it 22 points. 144 on the Dow, the Nasdaq's up 70, the Russell's up almost 10. And, of course, the one thing that we have or don't have is market volume. So when we look at this right now, you know, we've been coming in with about 7 billion shares total in all the markets. And we're about 3.4 billion. We'll look at how the volume's tracked in the spreadsheet I do for the daily newsletter today. We'll bring that up. But we'd need a lot more volume out here. There is a school of thought, which I believe in. It comes from Jesse Livermore, who gave some advice about not selling the first top, that is, wait. And if you get back up there and there's no volume, you go ahead and sell or start selling then. We've recovered, what, 88% of the NASDAQ losses since the downturn. It's been the strongest sector out there. And, of course, no surprise, higher interest rates mean that stocks that are less sensitive to it, either they've got the cash or that their profit margins are so huge that it's not a big factor. You're a grocery store, high interest rates kill you. If you were a software manufacturer with 80% margins, so you pay 1% more on something. First of all, you don't have a lot of infrastructure costs. And there's not a lot of manufacturing. There's not a lot of flow through of that higher costs. So not surprisingly, we see that everybody's flocking back into technology, but it's still not where it was at. We'll look at a few stocks today. And of course, shortened week, only 4 days this week. So then a lot of news that normally would come out is a little bit going to be pushed into next week. Earnings also next week. There's some stocks, nothing I think that would change the direction of the market, but we'll look at earnings for next week and a handful of other things. So give me a call, 877-927-6648. Email me at path@tfnn.com. And, of course, you can always put a message in the den. So we'll look at that. We'll talk about a little bit of history, and we'll move on.
And it's all just a little bit of history repeating.
Most people don't know it, but in 1861, right after the election, Abraham Lincoln was already trying to be assassinated by separatists. He showed up unexpectedly in the Willard Hotel in Washington, D.C., foiling a Baltimore plot against his life. The president-elect left his home in Springfield by train several days earlier, had planned to stop in Baltimore before continuing to the capital. Shortly after departing Springfield, his aides received reports of a planned assassination attempt in Baltimore and ordered the train to proceed immediately to Washington, D.C. And the Pinkertons, I think everybody's heard of them. Alan Pinkerton was a detective and basically started his own private police department for rich folk. And he was a big supporter of Lincoln. And he, on his own, hired a lot, or sent a lot of his own men to infiltrate the separatists and find out what was going on inside them. So kind of like kind of going deep cover, like the FBI says, deep, deep, deep cover. And finding those folks that wanted to kill the then president, or soon-to-be president, in 1861. It was one of a handful of assassination attempts throughout his tenure as president. In 1861, they were after him already. Okay, so what do we have going on in the rest of the market, and what are we going to be talking about today? Well, I suspect it is that volume. In fact, let's do that first, because that is oh man, the guy's been assassinated. Can we leave? Can we give him a break? Lincoln, here it is, 150 years later, still getting trouble after all these years. Too soon, just too soon. Okay, so let's go ahead and look at earnings next week. Like I said, not a lot of stuff going on. Armstrong Worldwide comes out Monday morning. That's probably going to be, I think, kind of already has the downside in housing already in it. Palo Alto Networks, the security company, PANW, after the bell, on Monday. Fitbit, that thing's been kind of circling the drain. Nutrisystems, kind of interesting to see whether or not they can do a Oprah on that stock and get it going, but so far not that much. On the open Tuesday, we get to Macy's, which is circling the drain. AutoZone, which the auto parts stores look like have been doing a little bit better. Toll Brothers, so a little bit more of a read on housing and how, what they're going to say going on in the near future. Also, lumber liquidators. I heard a few calls for that either this week or last week. Can't remember now. Intrepid Potash. This thing once went to the moon. You think it can do it again? I think those potash companies are playing possum, but always got to keep an eye on them. What else do we have? Wednesday, we get to Lowe's, Analog Devices, Valiant Pharmaceuticals, TJX Companies, Stratasys, the 3D printing company, Vail, who we argue many times at TFNN how it's pronounced. I actually called up the Canadian office and the office in Brazil, and even they pronounce it two different ways. So have at it. It's just it's like hippies invading the planet. So on Thursday, we go to Best Buy before the bell. Kohl's, VMware, Splunk, Ambarella, Pure Storage, Nordstrom's, The Gap. Those are a few of those are after the bell, actually. VMware and Splunk and Ambarella all after the bell. And that kind of is bringing up the end of the wagon for earnings. So that's about it. Oh, boy. We've got somebody that has taken a dislike to Lincoln after all these years. I don't know about that. Maybe you'll call and explain to me. Maybe everything I've been told is a lie. Kind of feel like that sometimes. Had a good lunch, spoke at length with an IT professional in the security business. I may write about that in the Tech Insider next week. Added a position today in the Tech Insider in a stock that I like that has some 30 days to cover. Just the literal act of looking at a stock like that can send it to the moon. We'll see how it does. In the meantime, we're going to take a short break and see you on the other side.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other Tigers and Tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I was saying in the den that you're just tuning across channels and you stop. And apparently on an episode of Ancient Aliens, there was somebody trying to espouse a theory that Lincoln was an alien or from outer space. And I'm thinking, the History Channel, man, has it sunk fairly low these days. Not history, actual non-fake news out just a little while ago was the Baker Hughes rig count up 3 at 978. That is up to 2 rigs on the oil and 1 on natural gas. So we've been having a fairly decent run of 7-8 rigs a week. Total of 3 rigs for both combined oil and nat gas is still more. And of course, actual crude kind of bouncing a little bit more today, up 57 cents. Natural gas down $0.015 at $2.62. What else do we have? Gold pretty much hanging steady, down a couple of bucks at $13.30. Silver off 11 cents at $16.47.5. Copper off 3, almost 4 cents. So a little bit of this, a little bit of that. Nothing earth-shattering. We see just a little bit of move up here in the OIH. Again, a very light volume day across the markets. Oak Island. Oh, that's another good one on the History Channel. They're all looking for something down in a pit and throwing millions of dollars in that pit. Okay, so we've got 3.7 million shares on the OIH. That's off the 22.95 low, and that low was February 9th. So you've gotten up a little bit. But again, you had a down day on the 21st. Volume increased. You popped a little bit yesterday with a little hammer. Volume was a little lighter, 7.6 million shares yesterday, 3.7 million shares so far, and going into a Friday, not expecting a great deal of volume to come back in. So I suspect there are a lot of stocks out here that aren't the top 5 or 10 stocks in the NASDAQ that are getting most, or if not all, the love. Seeing some of these, especially in the energy sector and a handful of other sectors, seeing the other ones. Okay, so let's go ahead and start looking at some other stuff. Kind of a surprise, HPQ out with earnings last night, and HPE, the split up versions of Hewlett-Packard. Nice little pop in this. Again, you would have expected a lot more volume for this kind of pop. Doesn't look like the shorts are blinking on this at all today. And I think this one had a fairly decent short interest. So hang on just a second. Let me get my software up and running. We'll take a quick look at it. Okay. HPQ. Okay. Well, 3 days to cover, so it wasn't that bad. We've had a lot of 6 and 8 and 10 days to cover in that. HPE. We'll see if that one had any more. No, about the same. Both of these look like they were about short the same amount. Decent volume up today on 14.4 million shares so far. That's already through this day of the 5th that had 13 million shares. So you're not quite closing above it, and kind of a little reversal. But if you hold this gap, I think on the margins you have to say that that's fairly bullish in this. HPE, the enterprise division on this one. Now this one, a little better looking out here, holds its high, a lot more volume. And this one actually completes this gap down, although you still have a gap from the gap up today. This gap down from the 1st of September that came down on 22.4 million shares. You're up on 36 million shares, so a legitimate close of that gap. And, man, you have to say that the previous CEO that left, I don't know where she go. Where did she go? All I know is she left. Kind of left this company in a fairly decent position, although there were many naysayers. Nay, they said. That's why they're naysayers. Okay, so we're looking at that. Kind of interesting. Now the stocks that I wanted to look at. First one is Boeing. I've had some people ask me about this one. And again, I'm not a big fan of stocks that go up to highs and instantly shorting them and just assuming that they're going to fall apart. Whether it's Jesse Livermore or all the other books or my experience, this is a lot more of what you look for in a high, especially in something that went up to these highs. So we're going to get, we're getting a close underneath Boeing out here. And this would be the first long-term bearish signal in Boeing. Doesn't mean that the wheels are going to fall off. And I'm loath to short a monopoly or even a duopoly. But if you're looking for stocks out here that have run fairly extensively without significant retraces, I think you've got the makings of a fairly nice trading range. I'm not predicting the end of Boeing. The wings won't fall off the planes. Air will not quit supporting them in flight. But that 319, 317 lows out here look like this could have a nice $40 trading range. From 360 back down into this area. The energy certainly off this February 9th low wasn't all that exciting. And you did come within a buck of the previous high with half the volume. That's enough for me generally to pull a trigger on this. Now, again, the only good thing isn't that the stock's going to zero. It's just that the trading range is so wide on Boeing. I love the stock, love the company. Still doesn't mean that a stock can't be a little bit too rich or too well invested. Last November, we talked about Amazon, literally everybody being in the stock, and it got, what it dropped, $200 or something. Same thing could happen in Boeing. I'm not saying $200 on it, but I think this thing could come back, and it looks just like in a bigger trading range right now, from that 320 to 360 range. And that wouldn't do anything to its long-term future. May even go higher eventually one day. But to me, just look at that stair step of volume lower. Okay, other things I wanted to get to today that make me a little nervous now that we're back up to these highs. And part of that is, let's see if I can find it here, it's in here somewhere. Or did I close it? No, there it is the liquidity. I'm looking at the NANEX, not NADEX, NANEX futures liquidity gauge. Maybe I should show that here. We're going to the break. It's gotten a little bit better, but man, it still isn't anywhere close to where we were before this last downtrend. I thought we'd be to the second or first world by now. We're stuck in somewhere between the third world and the banana.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with NADEX. NADEX, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, NADEX allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with NADEX in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. NADEX is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the NADEX banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay. I wanted to bring the spreadsheet up, and then we're going to get to a couple of messages in the den and a couple of emails, but I wanted to look at this already. I do this spreadsheet every day and put it in the daily newsletter. But, we had 12 million shares on the 9th of February. We're struggling to get to 7 million shares, or excuse me, 7 billion shares. And that's total throughout the entire markets. That's every share traded, whether it's in the dark pool or anything. And I think we can really see the liquidity change. This is still big volume compared to what we had before the downslide in late January. But again, total volume right now is about, let's call it 4 billion against 7 billion on a Friday with an hour and a half left. This is going to be a very short volume day. And I'm not predicting the end of the world for the indexes. I just think that there's some stocks out here that are kind of ripe for a little bit of culling out here. And there's just the light volume up on the highs. We'll know on Monday. I haven't pulled the trigger on any of these. But we do have, it's pretty easy to see whether you look at it in the dollar amount or the volume amount. So on the 12th, we had $422 billion traded. We got about 327 billion traded yesterday. My guess is that we're going to be under $300 billion for the day today. So the actual amount of cash moving back and forth is going to be significantly lower. But on the 6th and the 5th, we had almost $700 billion traded in a day on the 6th and $640 billion on the 5th of February. So we can see that the big days out here, we're kind of nearing about the halfway mark on both of those. And that's generally a sign that you're not going to have a lot of upside if you go higher. It's going to be muted. Doesn't mean it can't happen. Just normally you don't look for 100-point up days on the S&P when volume falls in half. It can still go up, but you kind of have to look at it. My guess is that a lot of shorts got their nose bloodied this week, and that will be a problem. Question in the den about whether Snap is a opportunity out here for a short squeeze. I think even in a slightly down market, it is. Earnings came out. They were pretty good, got to 21.22. Everybody hates this stock on the street, and it continues to be ludicrously shorted. Yesterday, 30% of all orders originated with a short sell on it. And you had a little bit more volume yesterday. But it is one of those things where it is kind of tough to justify this on just a straight chart basis, whether it had shorts in it or not. This thing actually does look fairly good. So match that with how many it's got. It did have 7.5 days to cover. I don't know what that bounce did because it's within that same reporting period. But we'll say you have 5 days to cover on this now, which I think is probably a good guesstimate looking at what the individual days were like between then and now. Today, a doji out here, almost no volume. I don't know if I pull the trigger today, but if we don't have a down move on Monday, I like it. If you could get 16.5 on this, I think that's a beautiful position to be in. And if you just got like an intraday spike into that $16.5 range, I might buy it. So it looked pretty good. Yes, if Kylie's back on. Do you believe any of that? Or is that just an easy story to write that's clickbait? Because to me, that's what it is. Well, everybody says it did. Was it going down anyway? See, that's the problem, is you can't remove one action for the other. It could have been going down anyway, as far as I know. We don't have two alternate days where she did do it and she didn't do it. We could split it apart. It looked to me, other than the volume slightly increasing yesterday, this thing was making a beeline right to where it is today. Yeah, maybe, yeah, just maybe moved a couple of days into one day. I think that's probably a lot more like it. This thing was going to come down to the $17 range, or at least it looked like it to me even before then, and test the bottom of that seventh day, which what the low of the day was 1696. It got to within a dime of it, what, 1705. So yeah, anytime some flaky Kardashian causes the market to move, I probably would be on the other side of that trade. So yeah, close. Maybe you get it tomorrow. Like I said, if you didn't get any volume Monday at 1650, I think that would be a fairly decent risk reward. And as far as I can tell, everybody continues to short the living daylights out of it. So I do like it. Okay, check our email here. See what we've got. Tesla, TSLA. I actually wrote about this in the Tech Insider today. I think it's kind of close. I'm going to talk to Tom O'Brien today in the Tech Insider segment at 3:30 after this show. And it's kind of interesting. Maybe they've run out of time. I certainly don't think that this thing gets a run back up to the 390 level. Again, it's got a lot of shorts in it, so it's kind of a tough stock to attack. But I just don't know how these guys spend another 10 or 20 billion dollars in sunk costs to actually get up and start competing against bigger car companies. I think they kind of had their window. They needed to have that Model 3 out and selling well and in every state in the union. It is problematic. This just looks like a bigger trading range to me, and the energy is off about 20% on the way back up. The key to getting in on Tesla is finding some kind of big spike where they run the shorts out of it. So does this thing get to 370 and close back below 360 one day? I think that would be kind of the signal that you would want to be looking at. Other stocks of interest to me today. Yeah. Oh, yeah. In fact, I wrote about that today. I'll talk to Tom about it. But BMW is selling 3 to 1 against Teslas for their pure electric vehicles in Europe. So, yeah, I can see all of that. Okay, what do we have? Go back here and look at a few others. Micron Technology, nice day today. Volume is a little bit stronger than yesterday. And, of course, we got an hour to go. 36 million shares going into 51 million shares January 4th. And, again, any of these semis, anything that smells of technology that has high margins doesn't seem to be caring about the higher interest rates. It's the bricks and mortars and other companies. We'll look at CAT when we come next.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And got a request to take a look at Intel. Did we cover everything we did? Man, I forget even between the commercials. Intel's back up here at resistance levels. You had 40 million shares on December 20th up here, 47 million shares on November 3rd in this $47 range. So again, could we be in a little lower trading range for a while, maybe consolidation with this $50.85 blow off top? Pretty good. Intel, I think, kind of, even though there's not a lot of volume, some of their chips were leaked. And I think a little bit of today is the fact that they've got 10 nanometer technology out and about now in some of the consumer and other chips. A lot of people thought that they made a mistake not going to the 10 nanometer earlier, but it seems to be a very good and wise decision, as many of the others like AMD and Apple and some of these other guys using Taiwan semiconductors, the yields were fairly poor, and it was actually more expensive instead of less for them to build these chips at the lower size. Generally, every time they get to a lower size, the actual cost continues to come down at the same time. This was not true with AMD and some of the others that went to 10, and some are down to 7 nanometer die sizes. And making stuff smaller is always great. Makes it faster, makes it use less power, which are all positives. The downside is, if 80% of the chips come through are workable products, that can be a pretty good day at Intel on some of their chips. And so they're throwing away 20% of their product. It may even be 90%. Who knows internally what they're doing, since they all get ground up if they don't pass the test. But a pretty nice little setup out here. And I think, as I said, what you want to be doing is watching the volume at the very end of the day, because there's a ton of stocks out here that are probably going to be giving signals. Now, is Friday and all end all? No, that's kind of why, unless it's half the volume. If we were doing 10 million shares right now until, I'd just say, hey, okay, if you bought it for the bounce, go ahead and take your cash. But if it's like 75% on a Friday, I'll give it till Monday. If it's just half the volume on a Friday, then normally I'll go ahead and act. And that is, if I'm long, I'll sell it. If I'm thinking about going short, that may be enough to push me over the edge. So we'll keep an eye on that. Let's look at some of the other ones. Amazon did test the previous high on lighter volume, as we talked about. Again, a lot of these stocks just going sideways. Amazon today doing that on lighter volume, 2.75 million shares. That's compared to 4.8 million shares yesterday and 6.3 million shares the day before, all going into this 11 million shares on February 2nd. There are a lot weaker stocks out here than Amazon, but that doesn't mean that this thing can't get into a little lower trading range or just go sideways, and either one of them is not good for the general market. Let's take a look at a few other ones out here. Okay. NFLX. And then we'll look at Apple. Again, not much juice. Yesterday we had 8.9 million shares. Today, 5.2 million shares. We got an hour and 25 minutes to go. So it's going to be, there's a lot of them that are going to be light. And again, I probably wouldn't be buying going into the close today on this light volume. And shorting, again, if these things come in half the volume, which literally Netflix is not, you got 9 million shares, so maybe it pulls back a little bit. You know, there's a handful of these things probably you wouldn't want to short, but some of the other ones are interesting. Let's take a quick look at Apple. A lot of huge negative press has been able to go higher. Take a look here. We got 21 million shares today. 22. Yeah, let's call it 22. 51 million shares on the 15th. Now, this is just a little bit above that today, but we're just about 21 million shares. So it's not like there's a rousing endorsement to come back. Energy off this February 9th low has been decidedly lower in Apple. Does not mean that this thing can't go to the highs or can't roll lower. But I would like a little better signal out here. I certainly wouldn't be buying it to go, and shorting it, you probably have the first support level at 168. So there's not that much in it. Like I said, there's a lot of other stocks out here, a lot more tasty than some of the others, and a great deal could actually have a huge move higher. Okay. What do we got? I'll go back here and look at these. Okay. Where's the rest of my things? There we go. I need to move this back. Okay. How much time we got? Okay. Let's go back and look at a few out here. Okay. Got a request to look at PANW. Earnings after the bell, as we said at the very beginning of the day. Zoom in here a little bit. Well, they had kind of a big down day yesterday and not much up there. Certainly, if you're along this thing and you bought it at the pullback, you're up 18 points. If it was a trade, I think you'd have to take it. If you're long-term, you're up against pretty fantastic resistance levels. But this is the strongest technology sector that there is out there, and that is security software. So after the bell on Monday, this is going to be a big sign for FireEye and CyberArk also, which are these three are kind of the kings of that particular part of the area of the market. Okay, IBB. This is one kind of interesting sector because it's doing a whole lot of nothing. Again, a lot of these things just going sideways for a handful of days. Could this complete a move higher? February 9th low at 101.02. We got to a 111.54, pulled back to 108.12 as the low today. It is kind of continuing to go sideways. This still looks like one of those sectors that could turn around this year and outperform all the technology stocks like the semis and internets and everything else. It just still continues to have light volume, though, so there's no big signal of that actually starting. Let's take a look at the IYT. Oh, we've got a one to look at in the TLT. We got a bounce. I was looking for 116, didn't quite get there, but I think we still get the 116 test. Maybe next week.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And if you're a subscriber to the Tech Insider, a new position out there in the Tech Insider. So you want to check your email inbox. You can be a subscriber too by going to the front page of TFNN. Look under investment newsletters. What else do we have in the end of the day? I'm very close to watching this thing. We're up 32 points on the S&P cash. If we just look at the numbers on what's going on in the NYSE consolidated tape, we probably should be 4 billion shares by now. We're doing about 2.1 billion shares. So this is where the rubber meets the road. And again, Friday is not the end of that. But if we continue to see this kind of action on Monday, I would be very concerned that we could get back down to 2680, which is kind of where I've been waiting to think that the next big move higher could go. So we'll look at that. But you really can't be jumping up and down on a day like this, seeing fairly thin markets with very light liquidity in the futures still, and incredibly light volume in the actual equities also. So a lot of stuff out here that looks a little suspect. We were talking about the TLT. Still think that this gets to 116. We got a brief respite, but look at the volume on the TLT today. 4.4 million shares. That compares to 9.3 million shares yesterday and 12 million shares the day before. So do you get a little bounce out of here and then come back down one more time for 116? I think the answer is probably an 80% yes. That may be enough to get the Treasury and some of the other guys off their rear ends. The threat of that starting to break below that 116 level, but be tough to know. Anyway, hang on. We've got Tom O'Brien for the next hour. I'll be back at the bottom of the hour. We'll be talking technology, a lot of stuff going on. In the meantime, sell when you can, not when you have to. We'll see you here Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter